Welcome to Money Market, a Bank of Tampa podcast. We highlight the businesses, expert business advice, local economy, and points of interest in the Tampa Bay market. Follow us on Spotify, Apple, YouTube, or wherever you find your favorite podcasts. And please share this episode with a friend or colleague. I'm your host, Owen Lefebvre, the Pinellas County Market President for the Bank of Tampa, Tampa Bay's oldest and largest community bank. Today, I'm joined by Doug Bishop, the CEO of Marsh McLennan Agency. Is that correct? For Florida?
That's correct.
All right. After graduating from Florida State University, Doug began his journey with Bouchard Insurance in 1997 as a commercial lines executive. Florida State has a reputation for being a strong risk management program, doesn't it?
Yeah, they do. Still have a real strong RMI program, risk management insurance program.
Okay.
As a matter of fact, my father went to the RMI program in the 70s. That's how long it's been around.
Oh, is that right? This is a generation. You have two kids that are going to Florida State too, right?
That's right.
Are they in the risk management program as well?
Not yet.
No?
I don't know if they're going to get in the family business yet or not. We'll see.
You encouraging them to?
Nope. I'm letting them do their thing. I know my daughter's not going to, but my son said he might.
Okay.
We'll see.
So over the years, Doug has had several key positions within the organization, including Workers' Compensation Division Manager, Sarasota Division Manager, Vice President of Sales, before becoming the third CEO of Bouchard in 2009 and the first non-family member, correct?
That's correct.
How was it becoming the first non-family member CEO? Was there any controversy that came with that? Was it just kind of were you groomed for it?
Yeah, no, not really. I guess I was kind of groomed for it to some extent.
Because there's still a lot of Bouchard family that works there.
Yeah, we still have quite a few Bouchard
no hard
folks.
Feelings?
No.
That's
the
amazing.
Bouchard family has been tremendous to me. My entire career. First of all, they gave me a chance. Young kid right out of Florida State, right out of the...
And only company you worked for. That's also...
Only company I've ever worked for.
Doesn't happen anymore either.
I graduated in December of 96 and went to work for them in January of 97. So inside of 30 days, started work for Bouchard Insurance and theoretically still there. I guess we're now part of Marsh McLennan Agency, but the same team, same building. That's sometimes it makes me sound a little old, but I'll be 53 in July, and I just celebrated 27 years going to the same building. And so when you start doing percentages, it's like, wow, more than 50% of my life I've been going to the same location in Clearwater off of 101 Starcrest Drive. But yeah,
so do you celebrate that, or is that depressing? I don't know. To me, I would celebrate it, but is it?
Yeah, no, I celebrate it. I certainly celebrate it. It's I always say that getting older is better than not. But
you're not wrong.
Right. But no, I do celebrate it. It is wild though as we continue to bring in next generation talent and. We have some folks that are going to be interning with the organization this summer that are friends of my kids, and so
I don't understand any of your generational references.
Right. No, I'm just like Mabry's dad or Nate's dad to them, right? But no, I do celebrate it. But going back to the Bouchard family, they were fantastic to me. They gave me that opportunity. Rick Bouchard, Tim Bouchard, Ray Bouchard were the three brothers that owned the agency, and their sister Marie Bouchard McClung. Who actually is the one who hired me. I tell the brothers all the time, she's the smart one because she's the one who hired me. And actually, as a side note, is one of the founders of Close to Kids, which I know you're familiar with.
Oh, is that right? Absolutely.
Yeah.
A great organization.
She retired in like 2001 and started Close to Kids. So, but they were great to me. Rick Bouchard was our CEO. Tim Bouchard was our COO. A smaller firm back then, so they did a little bit of everything.
Okay,
right? That's family-owned business.
Yeah, got to wear multiple hats.
They were also still in sales and dealing with clients, the whole bit. But early on, they really started talking to me about leadership and what that looked like, and really grooming me into the position. I actually believe that the first time I had a conversation with Rick about succession and leadership, those kinds of things, was 2004, and I became the CEO in 2009. So it was probably about a 5-year process.
Okay.
So by the time it came around in 2009, it really wasn't a surprise to anyone. It wasn't a surprise to the market. It wasn't a surprise to any of our colleagues. We were planning for this.
Well, you rose up the ladder, rose up the ranks.
Yeah.
I guess that final ascension, was that something that you approached and said, hey, like I may be interested in this? Did they come to you and say, Doug, this is where we see you in 3 to 5 years? Yeah,
it actually, just like I think a lot of leaders have this story, kind of fall into it to begin with, and then you realize that it's what you like. I was in production. I was in sales, young guy, again, out of school, trying to build a book of business, right? Building clients. And an opportunity came about to work on some national accounts, and specifically in workers' compensation space. But in order to do that, to take on this role, Tim Bouchard came to me and said, but I need you to manage the workers' compensation team.
Okay.
It was a small team of maybe 6 or 7 folks. And I thought at the time, I do not want to manage people. I can barely manage myself, right? Like this, I do not. But in order to get one, you had to do the other. So I found myself moving into this leadership role. And over a couple of year period, what I really learned is that I gravitated more towards the team leadership piece, more so even than the sales. And I love sales. I still to this day love to go on sales calls with our teams and obviously meeting with our clients. But that leadership piece really kind of got me. And so at that time, that's when I said, I want to really focus on this more. And again, it's very supportive, sent me to a lot of different third-party training, external training, mentored me incredibly well inside of the organization, and started putting me in different leadership positions. So I had 4 or 5 leadership roles along that in that process, and learned a lot, learned a ton.
I bet.
Yeah. And they gave me, again, I give them a ton of credit. They gave me the flexibility to fall on my face, which I think is important for young leaders sometimes, and then pick them back up, dust them off. But that's how you learn. And so,
are there some good stories there? Anything that stands out in particular as a tough lesson learned?
We had purchased an agency down in the Sarasota market, actually 3 different agencies that we were trying to assimilate into the organization. And it was a little bit of the Wild Wild West down there. And they sent me down there as the division manager was the title at the time. And the
hatchet man, go down there and chop things up.
Yeah. And so I thought, sure, why not? And, you just kind of walk in at the time I was 29 years old, I guess, something like that. And didn't know what I didn't know. Looking back on it, I don't think that the division was making any money, so I don't know if maybe they were taking any risks. They're like, well, we're already not making the money we need to, so how bad can it be?
Can't get worse, right?
But I've said those 2 years that I spent down in Sarasota, I could write a book on the things that I learned on how to deal with different colleague situations, different client situations. But ultimately, we got to where we needed to be.
Clearly, it worked out.
It worked itself out. But there were some interesting moments, no question about it. Yeah.
So how was the transition from going to that smaller company or the family-owned company to MMA, which is a huge company? Yeah,
it was. Well, so what's kind of interesting about my history with Bouchard is when I started with Bouchard in '97, it was owned by the 3 brothers. They had bought it from their father, who started it in 1948. So it really was that family feel. But in 2000, we actually sold and were part of a bank. I don't know if you know that.
I feel like I remember this.
Yeah. First National Bank purchased Bouchard Insurance. The Graham-Leach-Bliley Act had just been signed into law, and we were actually the very first agency to be sold to be part of a bank in the state of Florida. Yeah, in 2000.
That was hot for a while, and then they all, I'm sure, just like you all, I think all of them unwound.
Yeah, they did. So from 2000 to 2005, we were part of a publicly traded company, buying agencies like I was talking about in Sarasota, in the middle of the state, and growing under the flagship Bouchard Insurance brand. And then that bank sold to another bank, and that bank did not want to be in the insurance business, and so we had an opportunity to buy it back. And so we bought it back from the bank and took it private. And at that time, the Bouchard brothers were still involved.
Did you buy it back at a discount?
Yeah, we got a good deal. Okay. we got a pretty good deal.
For you.
It worked out pretty well. The banks were, Tim Bouchard used to say this. He goes, back then, the banks just didn't really understand our business. They weren't very smart buyers, and they were even dumber sellers. So it worked out pretty well. But no, it was actually great because it gave us an opportunity to really act differently than a family-run business. But we were back to being private, and the Bouchard brothers were involved. They invited me and a handful of other key employees to be shareholders with them, and a couple of the agency owners that had sold their agencies to Bouchard during the bank years stayed around to create a shareholder group that we were then able to create this internal perpetuation model where, my generation was in line to help perpetuate the agency and own the agency by the Bouchard family that generation out. So that happened at the same time I took over as CEO in 2009.
Okay.
And so then from 2009 to 2019, before we became part of the Marsh McLennan agency, it was a group of partners that were also employees, colleagues of the agency that we ran the company. And so we went from a family-owned business to being part, for a short period of time, for a publicly traded bank, to being private again, but not necessarily, still have that family feel, but not necessarily a family business. So it really prepared us to at least think about, okay, the next chapter when we join a large organization like we did with Marsh, it wasn't going from 0 to 60. It was still a transition, but not nearly to the degree that it could have been. Yeah,
you had some experience with that already.
Mm-hmm. Yeah.
How would you say? So, I mean, you started in sales as a producer and managed teams, to ultimately being CEO for Florida. How would you say your management style evolved through all those various positions?
I think the thing that comes along with age is empathy. And I think it's important for every leader to have a pretty strong level of empathy. It's important for people in sales to have a strong level of empathy. If you want to walk in someone else's shoes in order to deal with them, lead with them, whatever the case may be. And I think that when you're a younger leader, I think a couple of things that I've learned over my time is young leaders, and I talk to our young leaders about this all the time, you create an image in your mind of what a leader should do and what they should be, and then try to live up to that, as opposed to with time, you realize, no, leadership is about the people that you're leading and learning what they're all about, and then following where that takes you, being obviously grounded in your principles and what's your core values and what's going to drive you there. But don't create an image and then try to live up to it. Instead, pay attention to the team that's around you, and that becomes the image that you create. But I just think that that's a little bit of a natural tendency of young leaders.
So I definitely see that. I don't know if I could say I've experienced myself, but my empathy story is when I had gotten the opportunity to lead the Pinellas market. We went through, and the entire executive team went a industrial psychologist evaluation. Okay. And in my exit interview, what they said was the advice was an exercise for each of the employees, an empathy map. And so the advice I got is, you're a high producer. You don't have a lot of tolerance for people who aren't at the same level that you are. Many people aren't at that same level, which is what made you successful. I'm worried that, if they're not successful, you're going to dehumanize them. Mm-hmm. So here's an empathy map. And I remember walking away and thinking, I'm not a monster. Like, what kind of person? But it was great perspective. Sure. I never did the empathy map, but then I did have someone that I'd poured an incredible amount of just effort into coaching, and just didn't get it. Didn't take that next step. Yeah. And at that point in time, in my mind, I'm like, you're dead to me. Yeah. And kind of quickly realized, I'm like, remember the empathy map.
Oh, that thing, right.
I need to have some sympathy here and figure out why this isn't working. But
I think it's when I talk again to some of our younger leaders, up and comers, we try so hard to give them we mentor as seasoned. I like to use that word seasoned as opposed to old. Seasoned leaders, we try to, give them direction, mentor them. Certainly there's a lot out there in terms of their ability to learn on their own and send them to class. But at the end of the day, the experience is what creates that empathy piece. And it's really hard to build that muscle, I would say, without the experience. And so, exactly. And in some ways, and you need to have those moments to fall on your face, because that's where you're going to kind of learn. So, but yeah, I think that if I look back at the young leader that I was and versus who I am today, well, first of all, I hope I'm a lot smarter than I was back then. But boy, I had a lot more energy back then. So, you could just get the best of both worlds, right? Like 32-year-old Doug's energy with 52-year-old Doug brain, maybe that would
wisdom.
Be, right. Yeah, exactly. So anyway, it's learning that empathy piece. Yeah.
So what about mentors? You had mentioned the Bouchard family and brothers, but I mean, was that relationship kind of critical to your leadership journey?
Oh yeah, sure, absolutely. They were my first. Well, my first mentor was my dad, but that was and still is. But that was that's just life. And he would even come. I'd say that I've said that before, and he's like, I don't think I'm your mentor. I think I'm your dad, right? So he just kind of sees those as synonymous. But I did get a chance to watch the way he ran his business. He's in the insurance business still has an agency here locally over in Feather Sound. And I did get a chance to watch him at early age and how he ran his business, and actually worked in his office over the years. So I did learn a lot there. But yeah, my professional career, I guess, is the way I would describe that. The Bouchard brothers, all of them really, played a role in mentorship, and it was critical. I mean, I think we all look back and recognize that without mentors, there's no way we could get to where we need to be.
Yeah. So Dad never pressured you to join his agency?
Pressure might not be the right word. So he's a State Farm agent. He's been with State Farm since I was, I think his agency started in 1976. Okay. So it's been around for a long time.
Captive.
Yeah, and I just wanted to do something different. I was really more interested in the commercial space. State Farm at the time really still to this day doesn't do much on the commercial space, maybe some small business, but they're obviously predominantly on the personal lines side of business. And I was always intrigued a little bit more on the business side of it, or business insurance side of it. And but yeah, I mean, I think that, if we go back 27, 28 years ago, I'm sure he was like, really? You're not going to follow him? He doesn't say that to me anymore, but he did say that 27, 28 years
like,
ago.
You did all right, son.
It worked out all right. Okay. Yeah. But no, his agency's done well, and State Farm obviously is a great brand. It just didn't really fit with what I wanted to do at the time when I was coming out of college. So
good.
Yeah.
So I want to have you here to talk about the Florida insurance market.
Yeah.
It is very topical. I mean, it's something that's always topical.
I don't know what's the big deal.
It's an interesting. So it's a $7 trillion market in terms of overall exposure. Unique in Florida because of natural disasters and tropical storms. A lot of our community lives on the coast. Mm-hmm. It seems like our insurance is a little more expensive than perhaps some other markets that have some similar demographics and living like Texas and Louisiana. Mm-hmm. Why is that the case?
Yeah.
Where do you start?
Ready to start, yeah.
We're ready to go. I'll just sit back and listen for the next 30
minutes. You've heard me
minutes.
say this before, like everywhere I go. There's just one question people go, what's going on with the homeowners marketplace? I've been hearing that pretty much my entire career. The state of Florida we're not completely alone in this. Louisiana's starting to really feel this pretty big time as well. Texas to some extent. But we've been at the tip of the spear of the property insurance crisis or issue, I would say, going all the way back to Hurricane Andrew in 1992. That was kind of
Was that the catalyst?
Yeah, that's what kind of threw it to another level. Okay. If you look historically, insurance carriers, companies I don't think really had a good handle on what a potential loss could be with a storm like Hurricane Andrew, and that kind of put it on the radar and created a domino effect where you have large carriers. We were just talking about State Farm. State Farm at the time had a 30-some-odd% market share in the state of Florida. And so immediately they're like, wow, the exposure that we have in this state, we've got to change that. And for them to reduce their exposure means someone else has to pick it up, and everybody else, even if they weren't at 30%, if they're at 15% or 10%, like, we don't want any more. Yeah. And it just kind of created this domino effect. And we've lived that now for almost 30 years here in the state of Florida, and it's had its ups and downs as it does. Well, I shouldn't say downs. I was talking to a client the other day.
It is only ups.
It's a little bit more ups.
Sometimes it's stable.
Yeah, I was talking
ups.
to somebody recently, and I said, I don't think in my lifetime I've ever seen property insurance, both either commercial or personal, go down. I've seen it stay flat, which is a win, I guess. But yeah, we haven't seen it go down.
I would take flat right now.
Yeah, and I don't think we're going to see that. But I don't want to break anybody's hearts, but I don't think we're going to see that. I do think that what we're going to see, kind of jumping ahead, what we're going to see at least in the next year, is not as much of an increase. I mean, we saw some dramatic increases. If you
look, it was 40 or 50% annually for a while.
Yeah. I think the stat that I saw recently is since 2017, insurance on average in the state of Florida, both commercial and personal, has gone up 250%.
Wow.
So
So we mentioned Andrew in 92. Well, in 2017 we had Irma, which had a $5 billion impact.
Yeah.
So was that a direct result of Irma while we saw those increases?
Yeah, it's to some extent. And really the reinsurance market really starting to get a little concerned about what they were exposed to, and not to get into the real weeds of the insurance marketplace. But
I kind of want to talk about it a little bit because I think the Midwest has experienced some of that reinsurance issue finally.
Yeah. The reinsurance issue really in 2022 and 2023 became a national issue, not just the state of Florida and coastal states issue. And that's because they call them secondary perils as opposed to primary perils. Primary perils, insurance carriers look at those as things that they can kind of plan for. As bad as a hurricane can be, they model for this, and we've got time to think about how to do some loss prevention on the front end, because let's face it, they tell us about storms now that are 2 weeks out on the coast.
It is
of
amazing.
Africa.
Unlike a hurricane or a tornado, right? Mm-hmm. Which happens. We have plenty of warning. There's no reason that we shouldn't be able to evacuate the area, prep the house.
Yep. So a tornado is an example of a secondary peril where we don't have the time to think about it, and they are getting to a point where the damage and the cost of the damages are just as great, if not sometimes greater. Maybe not in such a wide area, but as great. And when you look at the cost of either way, a hurricane or a tornado, think about inflation. Think about what it costs to rebuild these days versus just even 5 years ago. All of this is kind of adding to this. And so that reinsurance issue has become beyond a Florida issue. But if you go back to really coming out of all of the hurricanes that we had in the mid-2000s, right? It seems like every year we'd have 2 or 3 hurricanes here in the state of Florida. It really crippled the property market. And it wasn't about price. It was about actual capacity coverage, getting coverage. Yep. And a lot of companies went out of business. Yep. Citizens, the state mandated or state run program, swelled to the largest insurer at the time. And that was a concern because now we've got a big risk that's actually sitting on the books of the state of Florida. Yeah. This is coming off of Katrina, where we almost saw, Louisiana and the city of New Orleans have to file as cities and states file bankruptcy because of the losses. And so the exposure in the state was pretty great. Fortunately, we went for a few years without having a big storm, and there were a lot of companies that were the term in the industry is a takeout companies that were created brand new, that were had contracts with the state of Florida to remove policies from citizens. And so we depopulate citizens. So then that happened for a while. Now you get to 2015, 2016, into that 2017 number I was talking about. You have a lot of companies that are only maybe 10 years old at best, that are, for lack of a better term, thinly capitalized in the grand scheme of things. And now we start to see storms again. We start to see issues, and then litigation. The litigation issue that started to really creep into the state of Florida.
Oh, man. So I want to talk about that. So the stat that you had definitely told me this, but I had heard it before, and every time I'd hear it, like my mind would just blow. But at one point in time, 80% of all insurance litigation was for the country was out of Florida.
Yep. That was right. And the other side of that stat was something like only 9% of the total personal lines claims in the country were out of the state of Florida, yet 80% of the litigated claims were in the state of Florida. Yeah, that's us. Welcome to Florida. Right?
And so what drove that? Was it the roofing thing?
The roof was a big part of it. Just older homes in general and damage, and then an assignment of benefits is a term that's been used. And so there was legally, people could assign their benefits to a third party that could then go and fight for a new roof or whatever damage that was done. And I remember a time where there was signs and someone's getting their roof done, and there's a sign like, we can get you a free roof too. Yeah. It got crazy. It got crazy. You had these companies that would drop a group of people off in a subdivision, and they just walked door to door going, "Hey, I saw a little bit of damage on your roof that probably happened from one of the storms. You signed this," and it was a little bit more detailed than this, but generally speaking, sign this and we'll go fight for you to get a new roof. It wasn't just the cost of the roof. It was the litigation to get to the new roof that really put a lot of pressure on the marketplace. Going back to the reinsurance issue, at the same time, these, I hate to use the word thinly capitalized, but in comparison to the major player, State Farm, that we talked about before, these newer companies, they were buying a lot more reinsurance than maybe some of the larger companies, meaning they were buying attachment points before the reinsurance came in down further. And by doing that, they were limiting their exposure. Right? So if a claim went above X amount of dollars, the reinsurance kicks in. And then you've got this litigation issue going on, and reinsurance carriers really aren't in the business of being that close to the very first dollar of a claim. Mm-hmm. And so this all kind of culminated in the past couple of years of reinsurance carriers going, enough's enough, we're not doing this. And so they increased premium to the insurance carriers and increased their attachment point, or if you think about terms, like along to the consumer. Yeah. And so that just dominoed through the whole thing. Okay.
So in 2022, the Florida legislature passed some reforms, some trial law, reforms. Yep. And I know they just went into effect in December 2023. Although, so that said, if I have my numbers right, I guess 3 years ago, 7 insurers left the market. 2022. So while this legislation was being contemplated, nothing happened. Yeah. Last year we had 7 new insurers come back into the market. Mm-hmm. Is it working? Is it too soon to tell?
It really is too soon to tell. But there's signs that it is working, because you're right. It hasn't even had the chance to even truly have the impact, but just the fact that it is coming has had a positive ripple in the marketplace. More insurers coming in, that's a positive. And honestly, I think that what's happening is the firms that saw this as an opportunity to drive some litigation costs just realized that, I mean, there's an expense to them having these armies out there and asking for new roofs and those kinds of things. And I just think that they see that it's going to be harder. And so they've slowed down. We haven't seen as many litigated claims coming through, and this is even before the actual.
Well, I know right before the deadline, it seemed like every trial attorney.
There was a ton. Right before the deadline, there was a big surge. So, but it's still way too early to tell. I think there's two things that has had a positive impact on the market, though. One, so we talked about hurricanes. If you're an insurance carrier, quite frankly, it's easier to plan for a hurricane than it is for these litigated claims, because litigation, it's you never know. You could have that one crazy claim that just doesn't make any sense. Everybody has that one claim. I remember as a kid going all the way back when McDonald's had to start putting caution
with the hot coffee.
Right?
Crazy,
because it was a crazy claim, and they just had to start doing those things. And everybody has one of those crazy stories there, like that's crazy. Well, that's what comes with litigated claims. Hurricanes, property damage, it can be a lot, but it's not going to be some crazy severity claim out of left field that you couldn't plan for. So, in a weird way, hurricane and natural disaster claims are actually easier to at least plan for from a dollar standpoint than this potential litigation. So even though I've heard just recently, I guess we're in, I don't know, I'm not a weatherman, El Nino, I believe. El Nino?
I forget. I always get the two mixed up.
El Nino, La Nina. Whatever we're in is supposed to create a bunch of hurricanes this year. That's what they're saying. But even with us looking at facing potential more hurricanes this year, we're seeing some quote unquote softening of the market, meaning we're not seeing premiums increase. More importantly, we're seeing more capacity. We're seeing more carriers coming to the market. Why is that? Well, because they see that the state of Florida is at least trying to address the potential litigated claims. Okay. Will it work? We still need some time. Yeah. But the fact that they've even addressed it has changed the conversation around the marketplace.
So what are you seeing for premiums? Are they going to be flat? Are we going to see?
They're not going to be flat. They're not going to be flat.
Well, we already talked about it. They're not going down.
No, they're not going down. Now the big thing is going to be about age of buildings.
Let's talk about it, because what was interesting, and I forget which hurricane just came through in 2022 through the middle of the state, but
2022, which one would that have been?
Wasn't so not Ian. What was it Ian?
It might have been Ian. Yeah, okay. It was Ian. That is right.
So
I think so.
Yeah, they hit like the Fort Myers market.
Oh, down south of us. Yeah. Mm-hmm.
So the building code changed in 2004. Mm-hmm. Anything built after 2004 virtually sustained like minimal to no damage.
Yeah.
It was all that older inventory, which a lot of Florida has a lot of older inventory. Yeah. So is that
that's what's driving that.
Yeah.
You talked about the condo collapse. You mentioned that at the beginning.
Yeah, Surfside.
Surfside, yeah. And you think about a lot of the condos that are up and down around the West Coast and the East Coast. There's the age of those are starting to creep up there. And so, insurers are really looking from that. In 2002, now it's become a number.
Okay.
It is today because it's 2024, so 22 years. I guess next year it'll be 03. But that's a big deal. Like if you have a home or if you have a business with something that's been built in the 80s or the 70s, it's still going to be a really tough market. But we're showing, and we've actually seen, like what you're talking about from hurricanes, that with some of the newer building codes, at least in the last 20 years, the sustained damage is not quite the same. And so carriers are really paying attention to that. So when we say, well, what's going to happen with premiums? I think that there's going to be pockets where we're going to see moderate increases. And there's other areas where it's not just even about the premium, it's about finding the coverage. Okay. Right? Because if you can't get carriers to write something that was built in 1981, now you're going to have to go to secondary markets. You're going to have to layer up and maybe multiple carriers. It's just going to you have to get creative to get the coverage. And when you're getting creative to get the coverage, premium becomes secondary, right?
Yeah.
But that usually means it's going to be more. This is an interesting little tidbit of this that I think of. There's nothing factual, I guess, around it other than to just think this way. The city of Tampa or the Tampa Bay area hasn't been hit with a storm since 1921, right? Everybody says that, and then they knock on wood or something like that.
But we have the Indian burial grounds that keeps everybody
of course,
right?
Allegedly, right? But what that also says is that we still have a lot of structures here that haven't been hit. And, I mean, you think of other areas, like you mentioned the Fort Myers area. Well, why did we have so many structures down there that was in new building codes? Well, because just about 5 or 6 years ago, they got hit, right? Yeah. Charlie came through there in 2005, I believe, if I got my year right.
Feels right.
And that did pretty good damage, and so you have a rebuilding of that. When you have a market like Tampa that hasn't had a widespread rebuild, we've got a pretty big exposure to older. But you're not going to just go and rebuild an entire community just because of insurance, right?
Yeah, well,
but if a hurricane comes through, right, then you're going to have to rebuild. So I don't know, just an interesting thing to think that since we haven't had a hurricane hit us directly in 100 years, we also haven't had to rebuild. And so, I mean, where we're sitting down here on Bayshore, there's some homes that have been here for a long time.
I used to have a 100-year-old bungalow. And trust me, at any sign of like a tropical storm, depression, I mean, I think it was a tent. It was a wood frame bungalow. It had tons of charm, but man, good gust of wind. I mean, that thing's going to blow over.
Think about the three little pigs, right?
Yeah, totally. So I'm joking with this question, but there's some truth in it. But I mean, can't we just blame Miami-Dade and Broward? Isn't that where a lot of the claims come from? It's 33% of the state's population.
There's a lot of people down there. Yeah. But again, I go back to, but they've rebuilt a handful of times too. There's some newer construction down there in comparison to here. Now they get hit a lot more. Yeah. They're out there on it. But yeah, there are a lot of people down there. And we can definitely blame them on our auto insurance if you want to do that. No question.
I'm happy to give them a blame.
No question.
So what are you advising clients on their insurance coverage? Like how to approach the market? Yeah. I know you do a lot of commercial too. And I will say, just for a little bit of context, for the first time in my career, I have seen, now the Bank of Tampa banks a lot of affluent people, but both commercial and residential folks getting the premium. In some cases, I mean, like you were saying, I mean, 100% increase in their premium. Walking into the bank with a check and saying, I'm just going to pay it off.
Yeah. And self-insuring.
Yeah. I mean, most people can't do that, but it's shocking to me. I probably can think of like 5 or 6 within the last 18 months that's happened.
Yeah.
I mean, I'm assuming you're not necessarily advising your clients to do that.
Yeah, you know, I mean,
maybe makes sense,
and maybe in pockets or taking on more risk, right? And certainly same type of thing in our high net worth category, our high net worth team. We've seen probably more than in my career of people self-insuring, saying the same thing, like, "No, I'm not paying that. I'll just take the risk." Self-insuring is not a horrible idea as long as you can really measure the potential risk that you have. And that's the one thing that I get concerned about is that it sounds, if you're banking on self-insuring because we haven't had a storm here in 1921, that's probably since 1921, that's probably not a good idea. But if you're doing it because you've got financial wherewithal to be able to weather that storm and make it on the other side, maybe it does make sense. Where maybe we have found some meeting in the middle is let's look at deductibles, let's increase to you truly are only carrying catastrophic type of loss. You're not going to make a claim for something that's, not a complete wipeout. But a complete wipeout is a big deal. And that's going to be a big financial hit to some people that have decided that I'll just pay the bank off. And we see this a lot in flood. We see it a lot in flood where people just say, I'm going to self-insure on the flood side. And it's a risk. Yeah. And we do our best to try to help them understand the risk that they have. They're still clients because they still have liability exposure, still have auto, and so we're still advising them on the best ways to manage their risk. But yeah, there's been a move towards that. Certainly, we've seen more of it than I've ever seen in my career. Yeah.
So last question. I know you're involved heavily in the community.
Yeah.
Anything you want to highlight there that you're involved with?
Yeah, I mean, just generally speaking, I believe it's our responsibility as leaders to be back in the community and support the communities that support us. And community can be defined in so many different ways. It can be the geographic area we live in. It could be industries that we work within. But it was preached to me early on in my career, and I continue to preach that I just think that communities are where it all begins. And we actually talk about how we've got this inside-out approach that we internally take care of each other so that we're in a position to take care of our clients, so the clients help us take care of the communities that we serve, and we're all in this together.
Sounds a lot like another company I know.
Yeah, one of them I know. Yeah, sounds very similar, doesn't it? But yeah, I've been a proud board member of the Pinellas Education Foundation for about 12 years now. Very involved there. The work that they've done in partnering with Pinellas County Schools is just really, really, really second to none. They are the number one education foundation in the country.
Yeah, great stuff.
So it's just really, really awesome group of people that are doing great things. I mentioned Close to Kids. What a great group of people driving a big need here for the Tampa Bay area. Very close to that one and very involved in helping support what they've got going on.
And one of our bankers sits on the board there.
Yeah, absolutely. It's a great, and they're actually having their 22nd birthday party here in a month. So
okay, right.
Yeah, looking forward. You might get an invite to the fundraiser. Oh,
I did get it.
You probably did get an invite. I bet you did.
We have a table.
I bet. Okay, well, we'll see you there. It'd be awesome. But then we get into our industry. I've been involved around the country in promoting and supporting the insurance industry. It's one thing I'm also a little passionate about. I think this is a great industry, and I think we don't do a good job as an industry in promoting this to the next generation of professionals coming out. At one point, there was an article from Wall Street that said, Wall Street Journal that said that we were in the top 10 as the least favorable industries for recent college graduates. And at the same time, we had about 25% of
bankers are there with you.
Right, I know. Yeah, bankers, you're right there with me. But so I'm on the board of the Risk Management Insurance Program at Florida State, helping them promote within the College of Business the industry, but beyond that, getting involved around the country and helping now my counterparts around the country to continue to look for that talent. So that's another community. That's a community that we're involved in. A lot of our clients come from different communities, industry communities that we're heavily involved in what's important to them and making sure that we're spending time in Tallahassee and helping them promote what is good for that industry. And so yeah, I'm a big believer in just getting involved in the community and however you want to define that community.
So if people want to reevaluate their insurance situation or just get in contact with you, how would you like to instruct them to do that?
Just give us a call. Marsh McLennan Agency here in Clearwater and Tampa. We got offices in Sarasota, Maitland, Vero Beach, Palm Beach Gardens, Fort Lauderdale, and Miami. So we got 680 colleagues ready to
good coverage.
Work with you.
Yeah, a bunch of people.
Yeah. You can find us online. Give us a call at the office. Drop my name. Give me a call. I don't care. We'll figure it out and see how we can help.
Well, Doug, thanks for coming on Money Market.
Absolutely.
If you have a question or a future show idea or would like to be a sponsor, you can send us a message at moneymarket@bankoftampa.com or find us on LinkedIn, X, Facebook, and on Instagram at Bank of Tampa and online at bankoftampa.com. Thanks for tuning in. Thanks for subscribing, and we'll see you around in the Money Market.